Good afternoon, everyone. Hope all is well. So, we are now going to be going live with a mortgage broker who is, and we're going to be discussing about the market currently, how the mortgage market has changed, or what's happened recently to it since all this lockdown that has been in place. Um, it'll be good to have someone give that insight on what the mortgage market is like after. Um, so, here we go.
Hey,
Aston, how are you doing?
yeah, not too
Sorry, I
bad
got caught
yourself.
up on a call earlier. Apologies for that.
No, I don't know how it is.
So thank you so much for coming on the live and appreciate you taking your time out to share the knowledge of what you do. Obviously, you're in the mortgage industry in terms of financing property purchases. Before we start and get the conversation going, Aston, if you can introduce
Yep,
yourself as to who you are and what you do, and then we can get the conversation moving forward.
sure. Yeah, I'm Aston. I'm a self-employed whole of market mortgage broker. I've been in the financial services for about 13 years now. Been broking for 6 or 7 years.
Okay.
Um, yeah, really enjoy what I do.
And just to take you back a bit, I mean, did you always think that you wanted to get into the financial markets? I mean, in terms of financing deals, property purchases, development schemes, or when you were young, going to school, university, college, did you always think that you wanted to aspire to be like a lawyer, a doctor, was that on the plate or no? It was always
Um,
going in, being an entrepreneur within the financial sector.
I wouldn't say when I was young. I think the first thing after being a footballer, I think I wanted to be a physio.
Okay.
Um, in the end, I didn't go down that route. I thought people in my family had gone into banking, so I followed in their footsteps. But then I'd say quite early on, once I got into sort of retail banking, I realised I wanted to move into the mortgage sector. I sort of just really got it. I understood it quite quickly and enjoyed it. I found it interesting.
Okay.
Um, so I started off in retail banking from when I was 18. Worked my way up, become a branch manager. But when you get to branch manager level, there's no where you can really go, and I'm always
I
looking for
mean,
that next
people sort
step.
of escalate on that in terms of becoming the branch manager, then the area manager, and then regional manager. I mean, did you think that that would be better to go up on that way, or you thought that no, I want to get into
Um,
the mortgage side
yeah,
of things?
so you could have gone down that route, but obviously the further you go up, the less roles there are. It's a lot longer wait to be able to get into those roles.
Okay,
Um, and also when you're working for a company like a bank, especially in the retail sector, your salary is going to be capped. It's going to
yep,
take you a long time to earn a decent level of
of
income.
course, of course.
Um, so I made the most of being in the bank, and I got them
And what
to.
sort of, I mean, which bank were you at, and what were your duties while you were there? I mean, being in the retail sector, what sort of
Mhm.
uh, banking inquiries or sort of what sort of clients did you deal with while you were there?
Yeah, so I worked for NatWest, and I was based in the city across various
Okay.
branches. I worked in Fleet Street, Liverpool Street, at Bank, covered a bit of North London as well.
Okay.
So when I started out, I was a cashier, and then become a customer advisor, which is where I was advising across multiple products, mortgages, current accounts, loans, investments, things like
Okay.
that. Did that for a while. Then when I become a branch manager, you end up doing a little bit of everything. Obviously, you're overseeing the running
Okay.
of a branch. But like I said, yeah, when you get to that level, it's very tough to move up. And I didn't really like the idea of becoming an area manager. I preferred being with the clients,
Okay.
advising. And that's where I did my mortgage qualifications through the bank and started advising solely
Okay.
on NatWest
Through
mortgages.
through through NatWest Bank, through NatWest Bank, you did the mortgage qualification.
Yeah, well, I did my CMAP
Okay,
independently, but NatWest funded it for me. Um,
okay.
Stayed with NatWest about another 18 months after that before I moved to an independent brokers,
And
whole of
was that
market
a
brokers.
requirement by NatWest that if they fund your course, you have to stay with them for a while, or you just decided to stay with them because they sort of funded that, so you were
Mhm.
obliged to do that?
Yeah, I was required to stay, but also I wanted
Okay,
to stay and get my head around the processes, the compliance side, which was the main thing you need to understand, and to learn that while only having to worry about one lender's criteria was helpful. And then once I got my head around the compliance side, and I'd seen that year, I stayed another 6 months, and then I went on to a whole of market mortgage brokers called John Charcoal in the city.
yep, yep.
And then I started learning more about the market, the different types of mortgages, and just how different lenders are and the different criteria they offer.
A lot of people say that the high street banks are not for everyone when you go and get a mortgage. Is that true? Or because not every high street bank can cater to an overseas buyer or even to a UK buyer who's got difficulties with, credit or some sort of, maybe the collateral, all that kind of stuff. Is
Hmm.
that the case,
Yeah,
that NatWest sort of on most of these high street banks look at?
yeah, to a certain extent, not always. I mean, with the high street lenders, their business model is selling in volume. They get so many applications, they want to turn around quickly. So they just want nice, clean, straightforward applications, which they can
Okay.
turn around quickly and get completed. I mean, each high street lender does have their own little niches.
Okay.
Um, so, for example, some of them are happy to lend off of self-employed people off of 1 year's accounts. Um, Others offer large loan to income multiples. So yeah, they do have their own small niches. But if it's if you've got a really specialist case, then that's when it's down to the mortgage broker to look at the smaller building societies and the specialist lenders
Yeah.
who are specialised in those areas.
And does it normally happen that if, for example, NatWest cannot offer something, do you recommend your partners who are there, like for example, RBS, you have on board? I mean, would they look at something that you wouldn't look at?
So I'm whole of market. So what I would generally do is when somebody comes to me and they tell me their situation, I would do as much research as before recommending a lender as possible. Um, I've got access to so many tools. I've got contacts within each different lender.
Okay.
Um, so generally, you've got a very good idea before you submit an application if it's going to be accepted. Um, there's always some things that can crop up, on the
Okay.
valuation or if an underwriter spots something which, um,
Sure.
but yeah, that generally the goal is to get it right first time.
Of course. Um, so when you finished, how long ago did you finish with NatWest and then you moved on to being your
Uh,
own self-employed mortgage broker?
so I left NatWest, I think it was in 2014. I went to John Charcoal, which
Okay.
were whole of market, but I was still employed at that stage,
Okay.
which was great. There's a lot of knowledge there. A lot of people have been broking for years. So I learned a lot there. But then I got to a stage where I wanted to grow myself and become self-employed, run my own business, which is
Okay.
then when I moved to Charles Darby. So I'm working under the banner of Charles Darby at the moment, but I'm self-employed. They allow you to grow and build your own business, which I'm really enjoying at the moment.
Absolutely. And what I mean, I know you mentioned that you wanted to grow yourself in terms of doing it solely,
Hmm.
but when you look at all these big names in the industry, in the mortgage industry, how do you sort of compete with them when you are a sole trader or
Hmm.
one person doing it, and there are bigger companies out there, like same in the estate agency world, like, right? Like BTH, for example, is no match
Hmm.
for Savills or Knight Frank and all these guys, big guns that are out there. So how
Hmm.
do you sort of look at the competition that you get from these big companies out there, private brokers, private banks, high street banks. You know, there's so many providers in this
Hmm.
industry. How do you compete with them?
Well, for me, it's all about the personal relationship that I have with my clients.
Of course,
A lot of the time, you find that if you go to a big company, you're just a number to them.
of
They want to
course.
get your case in and out as quickly as possible,
Yeah,
which for some people, that's all they need. If they've got a real straightforward case, then they might be happy to just go directly to their bank.
of
But
course.
for me, the service I offer is, I get to know my clients throughout the process. The whole mortgage process can take 3 months,
Yeah,
if it's a long chain or whatever. And that's why I focus on building up my own client bank, having people come back to me every 2, 3, 5 years, them recommending their friends and family. I mean, the benefit of being part of Charles Derby is that they are a big network in themselves.
yeah,
So I do still have some of the benefits of being part of a wider network, such as things like help with my administration, additional contacts. Um, if for example somebody
so
wanted
you're still part of the organization, but you're sort of self-employed. So you do get those benefits of being within that organization, and they can pass over business to you, or you can pass over business to them. So that's what sort of keeps you running on that part, I guess.
precisely, yeah, that's exactly it. So I'm quite fortunate. It's sort of the best of both worlds. Charles Derby offer me all the support I need, but at the same time, they're keen for you to go out and grow your business,
Of course.
um, and build yourself up. And I can use their administration support, or I can employ my own. I can employ other brokers myself.
Of
If I
course.
if I if I want to go down that route, they're really happy to help in whichever way I want to go.
Um, One question I have, you mentioned as well that sometimes it can take 3 months. But
Hmm.
yet, when let's say you're looking for a loan from the bank or, loan from a bridging lender and all that kind of stuff,
Hmm.
these are normally turned around within like a week, two
Oh yeah,
weeks.
yeah, yeah. No, definitely. I mean,
Why
again,
does
it
it
comes.
say so long with mortgages? I know, yes, there is paperwork. You got to see the income, you got to see what they're standing on, you got to see what's the
Hmm.
collateral, all that kind of stuff, the down payment. But
Hmm.
still, why does it say take so long for the process to come to a point where, yes, now we can give you a mortgage in principle?
Hmm. I mean, when I said 3 months, I meant sort of for the whole sort of house buying process.
Okay,
Because I stay in touch, even once they've got their mortgage offer, I'll stay in contact with them. So a lot of the time, then I'm organising their life insurance and things like that, and I'm chasing the solicitors on their behalf. So I take on that whole burden for them. Normally, the mortgage, I would say that the quickest offer I've had was 24 hours,
wow.
um, which is it's amazing when that happens, which is good because a
But
lot of the
that must
bigger
have
banks
been
now
that
they're
must have
doing
been like a straightforward paperwork. You've got everything tick, 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 tick.
exactly
The perfect
100%.
form that you want to see in front of you.
Yeah, yeah, and it's rare it happens like that because in that case it was a low loan to value. Their salary was paid into their bank exactly the same every month, so the bank was then able to verify it all electronically. So again, when it happens like that, it's great. It's nice and straightforward. On average, for the underwriting to be done, you're looking at probably a couple of weeks. It all comes down to how busy the lender is at the time. But if
Of
somebody
course.
comes to me and said, "Look, I'm in a competition with someone else. It's whoever can get the mortgage offer out first." That's when I have a conversation and say, well, if you go with this lender, they're offering the best rate at the market, but because they're offering the best rate in the market, they're busy at the moment. It's going to take a few weeks.
Sure.
Whereas if you're happy to pay a little bit of a higher rate, then I know this lender can turn it around quicker. So that's where everything I do is tailor made to the client's needs.
Of course. And in terms of working with private banks and
Hmm.
lenders who are there in abundance in the market,
Hmm.
uh, do you normally go to them when it comes to underwriting, getting the underwriting done or getting the finance, or do you have just maybe one or two financial institutions that you go to
Hmm.
get the financing? I mean,
Yeah, I have a.
it's like when you have a query from someone, let's say they want to buy their first home, do you
Mhm.
sort of spread that out to all the companies that you know, or just a few?
So I mean, when I start talking to people, there's different triggers, and you're already thinking about which lenders will do what. For example, if somebody's a first time buyer and they need to borrow 5.5 times what their salary is, in my head, I already know there's only a couple of lenders who do that. So I
Gotcha.
know I don't need to go to the whole of the market. I
Gotcha.
can straight away target these three lenders. Or, for example, if somebody has a complex income and they're high net worth, then that's when I think, well, that's when I need to look at the private banks. I need to look at Investec, Coots. But then there's also a couple of high street banks like Barclays, even though they're not a private bank, their criteria allows them to compete with the private banks.
Yep.
So, but then if somebody's got a real straightforward case, if I know that they're going to tick the box for 90% of lenders, we have a sourcing system. So I'll put their details in and it'll come up with who's currently offering the best rate. So when that happens, then you just go who's able to offer the best rate. But
Understood.
more often than not, I mean, when people come to me, a lot of the time they say, "Oh, I want the best rate." But when you start talking to them, you realise, well, it's not about obtaining the best rate. It's about finding a lender whose criteria you meet,
Of
and then
course.
of those lenders, of getting the best rate of the lenders who are happy to lend to you.
Why is it that people think about, it's a good point you made. Why is it that people think about getting the best rate
Mm.
rather than understanding that their criteria can only be matched with certain lenders and they may have to go for it if they really want to go ahead and get that property?
Well, it's the thing. I just think it's understanding. I mean, it's not every day people apply for a mortgage, and we're not taught it at school, which is something I think is really bad that we don't get taught anything about finances at school.
Of course.
A lot of people don't even understand how a mortgage works. So so people who come to me, and the thing is that they don't know what the best rate is anyway. They
Yep.
could come to me and I could provide them a rate.
Yep.
Then they're not going to know if that's the best rate
Yep.
on the market. But what you find generally, lenders all know what each other are doing. So if a
Yep.
lender's knowing that they're going to go out and offer the best rate, then what they'll do at that time, they'll tighten up the criteria. So they know that in order for people to get this rate, they have to be squeaky clean. Everything has to be straightforward, low loan to value. So again, that's down to me to have a conversation with somebody, and I could say, well, look, you need a lender who's happy to accept your bonuses for the last 2 years. You need a
Of
lender
course.
who's happy to accept X, Y, Z. So that narrows it down to, of the 150 lenders, to these 15. Of these 15, this lender is offering the best rate. So, but even
Gotcha.
then, it might be that the best rate on the market is 1.2%, but this lender is offering 1.4%. It's only a marginal difference. It might be a difference of £20 a month.
But then he's the only one that's offering it. And if you are
Exactly.
wanting to buy the property, you'll have to
Mm.
go for it. We've got a question here from Raj Kiran.
Hmm.
He's one of my supporters in my live sessions. Comes to all of them, and he's got a question for you here. Can you broker bridging and development finance? That's not fiance.
Yeah, so I've got access to a specialist within Charles Darby.
Okay.
Um, I could do it myself, but I prefer to refer it over to him because he's a specialist. He's got his finger on the pulse with bridging.
Okay.
Um, so it's a service that I can provide through a contact of mine.
Got you. So, Raj, if you want to get in touch with Aston, he will look into that for you. Or probably Aston,
Hmm.
you can just send him a DM later and he will look into that. Um,
More than happy to.
so the main question is what's happening in the market right now? How are mortgage brokers doing right now?
Hmm.
What's the hype in the market? How are valuations being done by the banks, by the brokers, by these financial industries in terms of
Hmm.
facilitating the finance for the property purchase? How are you doing during this COVID lockdown period?
Hmm. Well, I think the good thing at the moment is that banks and lenders, they're all sitting on a lot of money at the moment and they want to lend.
Before I get to that question, how
Hmm.
was it before, when it was announced that lockdown's there, 23rd of March? How was it for you during those past two
Mhm.
months in terms of paperwork, in terms of getting that finance? Was there a delay? Was there a backlog in terms of getting paperwork done, in terms of getting mortgages approved?
Mhm. I
And
think in
then you
that
can
first,
answer the question of
mhm.
how it is right now.
Yeah, so I think at the beginning, there was a bit of a delay, probably first week or 2 weeks, was to they're going to do their valuations, their underwriters were going to work from home.
Yep.
A lot of lenders straight away withdrew their products down to maximum of 75% loan to value because then they could do desktop valuations comfortably. Then
Okay.
gradually, some of the lenders went up to 85%. HSBC stayed at 90% loan to value throughout this whole process, which was good to have at least one lender stay there. So at
These are
first,
the high street banks you're talking about. What about the private
uh,
banks and the private lenders? Was it the same case across throughout?
yeah, it was pretty much the same across the whole market. The main
Okay,
issue was just being able to get the valuations done.
gotcha.
I mean, generally speaking, the underwriters were okay to work from home. It might have taken them a week to get their system set up and whatnot, but it was the valuations. And because if you've got a high loan to value mortgage, there's less room for error with that valuation. So if it was at 75% or less, and they looked on Zoopla, looked on Rightmove, and was able to ascertain a value for that property, they could afford to be a little bit out. But if it's 90% loan to value, they pretty much need that valuation to be spot on. So that's what was holding things back. That we couldn't get valuers out to do the valuations.
And
Um,
now I'm sure that has changed, right?
yeah, so
We're
now
sort
they
of in
can.
post lockdown now,
Yeah,
so
so
people are going out and doing their valuations and everything.
yeah,
Do
so
do you see a massive? I mean, do you see a massive difference in getting desktop valuations done and getting physical valuations done? Was there a huge difference between the two, or it's exactly the same?
I mean, I prefer desktop valuations because it's all done quickly, automatically. Even before COVID, desktop valuations just make your life easy. Um, but yeah, I understand that physical valuations have to happen in certain scenarios. And I think the one good thing from this is lenders have become a lot more accepting of desktop valuations. So I think we'll see a lot more of them going forward. Um, but yeah, so the physical valuations are happening again now, but of course there's a massive backlog which they're still clearing. So that's that's what the delays at the moment
Gotcha.
is where a physical valuation has to take place. It's slightly easing now because I think it's about 3 or 4 weeks since they've been back doing the physical valuations.
Yep, yep, yep.
But so actually we are seeing lenders coming back up to 90% loan to value. There's 4 or 5 of them doing it now, and every day we're getting
Wow.
emails from lenders saying that they're going to be doing it again next week, the week after, and whatnot.
And how do you see the market progressing from here? I mean, is there a massive demand? Obviously, tourism is shut right now.
Hmm.
There are no tourists coming in, there are no foreign investors coming in. But are you seeing a huge demand in overseas, or are you seeing a huge demand amongst the UK buyers, first-time buyers, or second home owners, investors,
Hmm.
buy-to-lets? Are you seeing what's the ratio like right now?
To be honest, I've been probably busier than I've ever been the last 4 weeks. I don't know if this is just people who couldn't buy during lockdown and now they've all come together and want to buy at the same time. But I also seen, I don't know about you, but I've been seeing lots of properties coming onto the market
Of course.
where I live in Essex, and property prices seem to be going up as well. Which I always think if property prices are going up, that's a good sign for the market. That's a good sign that lenders are lending.
Yep.
Um, but like I said, I mean, all these lenders, they've got 3 months worth of money that which they're sitting on, and while they're sitting on
Yep.
it, they're not making any money, so they want to
Of
lend it.
course. So they want to lend it and go out and
Mm.
keep on
And they're going
until
to be competing
un,
with each other, lowering their rates. So I definitely think for the next sort of 3 to 6 months, I think it's going to be good. It's hard to look further ahead than that. When you get to the end of the year, there's always get good rates because that's when the lenders who haven't met their lending targets, they offer good rates to lend the money they haven't lent earlier on in the year.
So do you
So,
think it's better to wait right now?
um, I mean, I never sort of think it's good to wait. I think if you see the prop,
In terms of, yes, you want to go out and buy it,
mm,
but now that you're saying that, let's say if these guys have not met their
mhm.
targets and they are to meet their targets, let's say by the end of the year,
Hmm.
and if the rate I'm getting right now is, let's say 1.5,
Yeah,
and by the end of the year I may get 1% or 0.8%. Do
yeah. I
you,
mean, I don't see it dropping that much, but the thing is, you could wait, and the mortgage rates available. Say they drop by 1/4%, but from now to the end of the year, the property you're buying might go up by 2%.
there you
And
go. So
also,
you sort of balanced it out
yeah,
either way.
and the value of the property is always going to be more than what you're taking out on the mortgage. So, this is where I have a conversation with people, and especially first time buyers. They keep saying, "Oh, I'm going to wait another year to build up a bigger deposit." And I keep saying, "Well, the problem is property values generally are going to go up quicker than what you can save. So in effect, you're actually getting further away.
Of
There's
course.
normally, aside from this COVID at the moment, you can get 95% loan to value mortgages. Just
Yep.
get together your 5% deposit and get on the property ladder. Once you're on it, you're on it.
And that's the best advice that right now in this current
Mm-hmm.
market that you're giving to your buyers, that don't hold your money,
Mm-hmm.
spend it, buy it, and then wait for maybe
Mm-hmm.
2 years, 3 years, stay in that property and go out and get another one.
Exactly, yeah. And, I'm not saying just go out and buy the first thing you see, but once you see that property and it ticks the boxes, um, then yeah, go ahead with it.
Are you seeing a massive demand in buy to let also right now?
Yeah. Again, I don't know what that's linked to. I've seen a huge increase in business on both residential and buy to let. I've got a lot of clients who are portfolio landlords, and they've got portfolios in the north and in Midlands, and I've got
Okay.
a couple who've got sort of one or two larger properties in the southeast. But yeah, again, that's always a good sign when people are going out and buying buy to lets, because it shows that the rental income is strong.
Absolutely. But thank you so much for coming on here and sharing all that amazing piece of knowledge about how you go out and get the mortgages and what do clients have to do in terms of getting the mortgages and what's the market like right now. So I appreciate you coming and sharing great pieces of advice. Before you go, Aston,
Yeah.
I do this with all my guests that come on here in terms of sharing positive advice. We've sort of gone through a lot of negative sentiment in the past 2 to 3 months. We're
Mhm.
trying to come out of that with all this lockdown finishing up and social distancing. But yet, there are people who've lost their jobs. There are people whose businesses have gone bust. There are people also. One more question that I wanted to ask is
Yep.
what's happening with the repossession? Because a lot of people are saying that if this mortgage holiday goes like, so let's say comes to an end and all these people that
Mhm.
have lost their jobs and businesses, they are not able to pay their mortgages, the
Mhm.
banks are going to start repossessing the properties. Don't you think that's a bit unethical?
Well, this is the thing that lenders, they have to um, they have to be sympathetic with people. So
Of course.
that and
I mean,
also
the thing is, we are not seeing a financial crisis. We are seeing
no.
a global pandemic crisis
Hmm.
where it's health at risk, not finances
Yeah.
at risk.
Yeah.
But obviously, it has a roll-on effect on everything.
Exactly. Yeah. I mean, I think yeah, people need to remember banks, no matter what, the last thing they want to do is repossess a property. It costs them a lot of money to do so. It has to go through the courts, and a lot of the time, by the time they get hold of that property, a lot of the time they struggle to make back the mortgage they've got against it. So banks really don't want to do that. It's a last
But
resort
do
for
you
them.
think that's going to be the case after the mortgage holiday is over?
Um, Obviously, there will be cases. Do I think there's going to be problems like 2008? I don't think it'll be like 2008. I don't think it'll be as
Gotcha.
bad as that. I think lenders will be very sympathetic. Um, yeah, I don't see it being a huge problem. Like I said, there's always going to be casualties, which unfortunately is always the case. But
Of course.
I don't think it's going to be terrible.
But do you think the bank is going to sort of analyze that on the basis maybe, let's say, Mr. So and so has been defaulting on his payments even before
Mhm.
COVID. Do you think those people are more at risk right now rather than people who've just
Yeah,
defaulted for the first time in their life?
yeah. So the lenders, they will take into account the whole situation. They'll like, is there an explanation? Is this likely that they're going to be able to turn it around? Are the banks going to get their money back through another way? So yeah, so if it's someone who's got history of not making their mortgage payments, then they were probably already on the bank's radar anyway.
Got you.
But yeah, if you've been, perfectly fine up until now, and then you can evidence that because of what's happened this year, it's affected you, but they can see that you're a hardworking person who's going to be able to get your income back up and going. Then,
Yeah,
like I said, the last thing they want to do is to repossess the property. So there'll be a lot more understanding for people like that.
absolutely. But again, once again, thank you so much. Do share your positive advice with us, please.
Uh, I don't know. For me, to stay positive, I've always thought if you're ever thinking about something, just dive in and do it and ask questions later. You'll be surprised at uh, how strong you can be when you just chuck yourself in at the deep end.
Absolutely. Um, Before we go, Aston, we've got a few questions out here. Uh, Someone who's
Mhm.
requiring a bridge for 2 million, if possible. Would you look into that?
Yeah, yeah, sure. Yeah, drop me a message, and yeah, I'm sure if the loan to value stack up and the exit plans there, it'll be doable.
Super. But do get in touch with Raj. I'm sure he's got some business for you there. So do DM him, and I'm sure he will be able to go on and do something with you. So thank you so much for coming
Definitely.
on and sharing all that, again, all the mortgage knowledge. It's good to open up the brain with all that's going on in the market right now, especially property and mortgages sort of hand in hand, right? It's always the
Yeah,
case.
100%. Yeah. Oh, it's been a pleasure. Thank you.
Thank you, Aston. Take care.
Take care. Bye bye.
Bye. So that was Aston, the mortgage guy. Look, if you have any queries regarding your mortgages or you need any financing on your development, you need a bridging loan, you need to buy your first property or your buy to let, get in touch with Aston. I'm sure he will look into that for you. Thank you to Aston for coming on here and sharing all the knowledge that he had, what he's done in his career, and what he's doing right now, and how is the mortgage industry shaping up for post lockdown. Thank you so much. Thank you to all the viewers that tuned in. It's a pleasure to have you. Do tune in at 3 p.m. today, where I've got a motivational speaker coming on, and he's going to be discussing about clarity within the business that you're dealing with. So do tune in. Thank you so much. Take care. Bye bye.